AU Small Finance Bank, their profits, they just surged, like a whopping 41% year over year,
Wow.
hitting 528 crore rupees in Q3 of fiscal year 2025.
That's impressive.
That's serious growth. And today, we are going to unpack exactly how they pulled it off.
Sounds good.
We've got their financial report,
Okay.
their press release and investor presentation,
Uh-huh.
which means we're diving deep into the numbers to give you the real story behind their success this quarter.
Yeah, it's really impressive, especially considering all of the current economic headwinds that everyone is facing.
Right.
Subdued growth,
Yeah.
tight liquidity, and just the struggles in the unsecured lending sector.
Yeah.
Those are some serious challenges.
Totally. So how are they managing to not only stay afloat, but actually thrive in this environment?
I think that's the million-dollar question.
Yeah.
And their Q3 results offer some really interesting clues.
Okay.
Let's start with kind of the overall picture.
Yeah.
They posted a 41% profit jump in Q3.
Wow.
And for the first 9 months of the fiscal year, their profits are up 38%.
So that momentum is undeniable.
Yeah, definitely.
And they're showing a solid return on assets and return on equity,
Right.
which, tells you they're using their resources and investments effectively.
Exactly.
Yeah.
But what's really interesting is how they're navigating those economic challenges that we just mentioned.
Yeah.
It's like they're playing chess while everyone else is struggling with checkers.
Okay, I'm intrigued. Let's break down their strategy, starting with deposits and liquidity.
Okay.
Their report shows deposit growth,
Uh-huh.
which is good, but it also mentions a slight increase in the cost of funds.
Yeah.
What's happening there?
So think about it like this. When money is tight, everyone wants to hold on to it more.
Right.
So banks have to work harder to attract deposits. And that often means offering higher interest rates.
Okay.
And those higher rates, in turn, increase their cost of funds.
So it's a bit of a trade-off.
Yeah.
They're growing their deposits, but it's costing them a bit more.
Exactly.
What about the makeup of those deposits? The report breaks it down into CASA, that's current and savings accounts,
All right.
versus term deposits.
Yeah.
Why is that split important?
It all comes down to stability and cost.
Okay.
KC deposits tend to be stickier,
Okay.
meaning people keep them in the bank longer.
Got it.
They're also cheaper for the bank to manage than term deposits, which have a fixed maturity date.
Makes sense.
So a higher CASA ratio is generally a good sign for a bank's financial health.
Got it. So what does their report tell us about their case situation?
So their CASA ratio for this quarter was 31%,
Okay.
which is slightly down from the previous quarter.
Okay.
However, their overall liquidity position remains really strong.
Okay.
They have a liquidity coverage ratio, or LCR, of 115%.
Okay, break that down for me. What does an LCR of 115% actually tell us about their financial stability?
Imagine a bank's liquidity as a big water tank,
Okay.
and the LCR is like a measure of how full that tank is.
Okay.
The higher the percentage, the more water they have on hand to cover any potential outflows. Like, if a lot of depositors suddenly wanted to withdraw their money all at once,
Got it.
an LCR of 115% is like having an overflowing tank, a very healthy sign.
That's reassuring.
Yeah.
Now let's shift gears to advances in asset quality.
Sure.
We see that their loan portfolio grew,
Mm-hmm.
mainly driven by secured loans.
Yep.
Why might they be emphasizing that type of lending?
Remember those economic headwinds we talked about?
Yes.
Well, the unsecured lending sector is taking a hit,
Yeah.
which makes a focus on secured loans a very smart move right now.
Right.
You'll notice they're leaning heavily into secured loans, particularly in housing and gold loans.
Okay.
These loans are backed by assets, making them less risky for the bank, especially in a shaky economy.
Makes sense.
It shows they're prioritizing long-term stability over chasing quick growth in a volatile market.
That's a savvy strategy considering the current economic climate.
Yeah.
But their investor presentation mentions a dip in the yield on advances.
Right.
What's driving that trend?
It's a balancing act for them.
Interest rates have been rising. And while that can be good for banks on the lending side, it also means they may have to lower yields to attract borrowers in a competitive market.
Yeah.
They're trying to find that sweet spot that keeps their lending business profitable without scaring away borrowers.
Makes sense. Now let's talk about the elephant in the room, non-performing assets, or NPAs.
Okay.
Their report shows an increase in both gross and net NPAs this quarter.
Right.
That doesn't sound like great news. Can you explain what that means for the bank and its investors?
You're right. An increase in NPAs is something investors always watch closely
Yeah.
because it signals potential trouble on the horizon.
Yeah.
Basically, it means more of the bank's loans are at risk of not being repaid.
Okay.
Think of it like this. You lent like 100 rupees to a friend and they never pay you back.
Yeah.
That's a non-performing asset for you.
Oh, okay.
Now imagine you're a bank lending millions or even billions of rupees.
Right.
Even a small percentage of those loans going bad can significantly impact their bottom line. So how worried should we be about this increase in NPAs for AU Small Finance Bank? Is this a sign of bigger problems, or are they managing it effectively?
It's definitely something to monitor,
Okay.
but it's important to look at the context.
Yeah.
Their report emphasizes that this increase is primarily driven by their unsecured lending segment,
Okay.
which, as we've discussed, is facing challenges across the entire industry.
Yeah.
It's not necessarily a reflection of poor management on their part,
Okay.
but rather kind of a sign of the times.
That makes their strategic focus on secured loans seem even more brilliant, right?
Okay.
Plus, they have a provision coverage ratio of 80%,
Right?
which shows they're being proactive.
Mm-hmm.
Hold on. What's a provision coverage ratio?
Right.
And why is 80% considered a good number?
Think of it like a safety net.
Okay.
It's the percentage of bad loans that the bank has already set aside money to cover,
Okay.
just in case they can't recover the full amount.
Okay.
A higher ratio means they're better prepared for potential losses. Kind of like having a bigger umbrella for a storm.
I like that analogy.
80% indicates they're being pretty cautious and acknowledging the risks in the current environment.
That's good to know. They're not just ignoring the potential downsides, they're actively preparing for them. Now, within that unsecured lending segment, they have a significant microfinance business.
Right.
This is an area that's particularly sensitive to economic downturns.
Yeah.
How are they handling the challenges in this segment?
So the microfinance sector is facing some headwinds right now.
Yeah.
And customer over-leveraging is a big concern across the industry.
Okay.
But AU Small Finance Bank is taking a multi-pronged approach to manage these challenges.
Right.
They've tightened their underwriting standards, meaning they're being more selective about who they lend to.
Okay.
They're also laser-focused on managing costs and improving their collection efficiency.
It sounds like they're being very strategic and cautious, which aligns with their overall approach so far.
Absolutely. And one detail from their investor presentation I found particularly interesting is their average loan size in the segment.
Okay.
It's among the lowest in the industry, which suggests they're trying to minimize risk by focusing on smaller, more manageable loans.
That's a smart approach. Now let's move on to their profitability and capitalization.
Oh.
Their report shows profit coming from interest income, fees, and other sources.
Right.
What does this mix tell us about their business model?
For AU Small Finance Bank, the bulk of their profit is still driven by interest income.
Yeah.
But they're seeing positive growth in fee income, especially from loan processing and other fees.
Okay.
This diversification is a good sign as it reduces their reliance on a single revenue stream.
Makes sense. They're also highlighting a reduction in their cost-to-income ratio, which sounds like a positive development. What does that actually mean in practical terms?
It's all about efficiency.
Okay.
A lower cost-to-income ratio means they're spending less to generate each rupee of income. It's like finding ways to streamline your budget and get more bang for your buck.
Right.
It's a key indicator of how well they're managing their operations and controlling expenses.
And finally, let's talk about their capital adequacy ratios.
Okay.
These are often mentioned in financial reports, but what do they actually tell us about the bank's overall financial health?
Capital adequacy ratios are crucial indicators of a bank's ability to absorb potential losses and weather financial storms.
Okay.
Think of it like this. The capital they hold is like a safety cushion.
Okay.
The higher their capital adequacy ratios, the bigger that cushion is and the better equipped they are to handle unexpected challenges.
So higher ratios are like having a larger financial safety net, right?
Exactly.
What do their current ratios tell us about their preparedness?
Their capital adequacy ratios are well above the regulatory requirements, which means they have a solid capital buffer.
Okay.
It's like having extra padding in your helmet.
Yeah.
It might not be exciting, but it sure is comforting to know it's there if you need it.
Okay, that's reassuring to hear. Yeah.
It sounds like they're managing their financials very carefully and taking a responsible approach to risk management.
Yeah.
But we've only scratched the surface of their Q3 performance.
Right.
There's still so much more to unpack, like their expansion plans and their digital strategy.
Right. Those are some fascinating areas we need to explore.
Yeah.
Their merger with FinCare Small Finance Bank is a game changer.
Right.
And their digital initiatives are really pushing the boundaries of how banking is done in India.
It's incredible how they're not only achieving strong financial results, but also making strategic moves to solidify their future.
Uh-huh.
I can't wait to delve deeper into these areas.
Me too.
All right, let's talk expansion.
Okay.
AU Small Finance Bank has been making some big moves,
Yeah,
especially with their merger with FinCare Small Finance Bank.
right.
This seems like a major play for them, wouldn't you say?
Absolutely.
Yeah.
Their investor presentation really highlights how they're using this merger to expand their footprint,
Co.
particularly in South India.
Okay. Which is a key growth market.
Right.
FinCare already had a really strong presence there.
Uh-huh.
And this merger kind of lets AU Small Finance Bank tap into that existing network and customer base.
Right.
It's a savvy way to accelerate their expansion without starting from scratch.
It's like they got a fast pass to a whole new region.
Exactly.
Their presentation also mentions integrating FinCare's small business loans and affordable housing loan businesses with their existing operations.
Yeah.
What kind of impact will that have?
It's all about creating synergy and unlocking new opportunities.
Okay.
By combining their strengths, they can offer a wider range of products and services,
Right.
attracting a broader customer base.
Got it.
And geographically, it opens up possibilities not just in the South, but also in states like Uttar Pradesh.
Oh, okay.
They're clearly aiming for a pan-India presence.
So they're thinking big and strategically positioning themselves for future growth.
Uh-huh.
But it's not just about expansion for them, is it?
Right.
Their commitment to financial inclusion is a big part of their story.
Absolutely.
Yeah.
They're not just chasing profits.
Right.
They're genuinely trying to make a difference in
Yeah.
underserved communities.
Yeah.
Their investor presentation has some compelling statistics about their initiatives in this area.
Okay.
For example, out of their 2,400 touch points,
Okay.
766 are in unbanked rural centers.
Wow.
That's a significant commitment to reaching those who are often excluded from traditional financial services.
That's impressive. They're truly walking the walk when it comes to financial inclusion. What other initiatives stood out to you?
Well, they're actively involved in government schemes like the Pradhan Mantri Jan Dhan Yojana,
Uh-huh.
which aims to bring banking services to every household in India.
Okay.
They've also organized over 17,000 financial literacy camps in rural areas
Wow.
to educate people about financial products and services.
That's great.
It's not just about providing access, it's about empowering people to make informed financial decisions.
It's like they're building a bridge to financial literacy,
Yeah.
helping people navigate a world that can often feel complex and intimidating, especially for those who have been excluded from the traditional banking system.
Right.
But they're not just focused on physical expansion and social impact, are they?
Nope.
They're also leveraging technology to make banking more accessible and convenient.
Exactly.
Right.
Their digital strategy is a game changer.
Yeah.
Their mobile banking app, AU0101, has been making waves with significant growth in terms of registered users, monthly active users, and transaction volume.
So clearly customers are embracing the convenience and flexibility of digital banking.
For sure.
It's fascinating to see how they're blending the physical and digital worlds,
Yeah.
offering customers the best of both. What's particularly interesting about their digital strategy?
Their investor presentation goes into detail about AU0101,
Okay.
showcasing their focus on constant improvement based on customer feedback.
Yeah.
They're actively adding new features, refining the user interface, and ensuring the app is both secure and user-friendly. In today's digital age, a seamless mobile banking experience is crucial.
Right.
And they're clearly committed to staying ahead of the curve.
It's like they're treating their mobile app as a living, breathing entity,
Yeah.
constantly evolving and adapting to meet the ever-changing needs of their customers.
Exactly.
It's not just a static tool, it's a core part of their growth strategy.
Right. And remember, while they're embracing the digital revolution,
Yeah.
they're not abandoning their brick-and-mortar presence.
Right.
They have plans to add 60 to 70 new branches in major cities.
Okay.
It's a smart approach.
Mm-hmm.
They're catering to a wide range of customer preferences,
Uh-huh.
ensuring everyone feels included and connected to the services,
Yeah.
whether they prefer digital or traditional banking.
It's like they're creating a banking ecosystem that's both comprehensive and accessible, meeting customers wherever they are in their financial journey.
Yeah.
They're achieving impressive growth while maintaining a strong focus on financial inclusion and top-notch customer service.
For sure.
It's a balancing act for sure, but they seem to be pulling it off with remarkable success.
Agreed. Their commitment to innovation and customer centricity is apparent in everything they do.
Yeah.
And we haven't even touched on their sustainability initiatives,
Oh, right.
which are outlined in their investor presentation.
Okay.
They're actively promoting environmental and social responsibility throughout their operations.
So they're not just talking the talk.
Right.
They're walking the walk when it comes to sustainability.
Exactly.
They've got programs focused on green lending, skill development,
Yeah.
women's entrepreneurship,
Yep.
and even supporting disaster relief efforts.
Right.
It's a holistic approach that demonstrates their commitment to making a positive impact on the world beyond just their balance sheet.
I agree.
They're a company that truly cares about people and the planet, not just profits.
Their dedication to ESG principles is truly commendable.
Yeah.
It's clear that they see sustainability not just as a box to tick, but as an integral part of their business strategy.
Yeah.
They're proving that you can be profitable and purpose-driven.
Right.
And that's a powerful message to send.
So they're financially sound.
Yeah.
Expanding strategically, committed to financial inclusion, embracing digital innovation, and prioritizing sustainability. Is there anything they're not doing well?
That's a great question.
Yeah.
Honestly, based on these Q3 results, it's hard to find any glaring weaknesses.
Right.
They seem to be firing on all cylinders.
Yeah.
Which is incredibly impressive, especially in the current economic environment.
It's like they've cracked the code to success in a challenging market.
Yeah.
But let's not forget that every business faces challenges.
That's true.
And AU Small Finance Bank is no exception.
Right. And it'll be interesting to see how they navigate those challenges in the coming quarters.
Yeah.
For example, integrating FinCare fully and seamlessly will be a complex undertaking.
Right.
They'll need to carefully manage the cultural differences between the two organizations.
Yeah.
And ensure a smooth transition for both employees and customers.
And the microfinance sector remains a volatile area, sensitive to economic shifts. While they're taking steps to mitigate risk, they'll need to stay vigilant and adapt to the ever-changing dynamics of this market.
You've hit the nail on the head.
Yeah.
Managing risk effectively will be crucial for their continued success.
Well, we've covered a lot of ground here.
We have.
From their financials to their expansion plans, their social impact initiatives, and their digital strategy. It's clear that AU Small Finance Bank is a company on the move.
Absolutely.
What stands out to you as the most impressive aspect of their performance this quarter?
For me, it's their ability to balance ambition with prudence.
Okay.
They're not afraid to make bold moves.
Yeah.
But they're also incredibly careful and strategic in their approach.
Makes sense.
They're not just chasing short-term gains.
Right.
They're building a sustainable business for the long haul. And they're doing it while staying true to their values and making a positive impact on the world around them.
I completely agree. They're a fascinating example of how a company can be both profitable and purpose-driven. It's a powerful combination that's clearly resonating with investors and customers alike. We've explored AU Small Finance Bank's impressive financial performance, their bold expansion plans, their commitment to financial inclusion, and their innovative digital strategy.
But before we wrap up this deep dive, I think it's crucial to kind of zoom in on a theme that's woven throughout all these areas.
Okay.
Their unwavering focus on risk management.
You're absolutely right. From their strategic emphasis on secured loans to their cautious approach to microfinance, they're not shying away from making tough decisions to protect their bottom line and ensure long-term stability.
Exactly. And that disciplined approach is a hallmark of a well-managed bank.
Right.
Especially in today's unpredictable economic landscape.
For sure.
Their willingness to tighten underwriting standards, even if it means slightly slower growth in certain segments, demonstrates a long-term vision and a commitment to sustainable growth.
They're not just chasing quick wins. They're building a solid foundation for the future, brick by brick.
Precisely.
Yeah.
And their conservative provisioning policy is another prime example of that prudent risk management.
Right.
They're setting aside funds to cover potential losses.
Yeah.
Which acts as a buffer for their balance sheet and protects them from unexpected shocks.
It's like they're always prepared for a rainy day.
Right.
So they're not caught off guard when the storm hits.
That's a perfect analogy.
Yeah.
And the best part is their risk management strategy seems to be paying off handsomely.
Yeah.
Their capital adequacy ratios are strong.
Okay.
Their liquidity position is healthy, and their overall financial performance remains remarkably robust.
So they're managing to strike that delicate balance between ambition and caution.
Yeah.
Which is no easy feat in today's dynamic market.
It's a testament to their leadership and their strategic decision-making.
Yeah.
They're not just reacting to market fluctuations.
Right.
They're proactively anticipating challenges and taking steps to mitigate them.
So smart.
That forward-thinking approach is a key ingredient in their success.
And it's clearly resonating with investors who are looking for both financial returns and stability. But let's not forget the other side of the equation, their commitment to making a positive social impact.
That's what makes AU Small Finance Bank such a compelling story.
Right.
They're not just a profit-driven machine.
Yeah.
They're genuinely invested in creating positive change in the communities they serve.
Right.
Their focus on financial inclusion and their various social impact initiatives are proof of that.
It's like they've found that sweet spot between being a thriving business and a responsible corporate citizen, proving that you can do well by doing good.
And that dual focus is attracting a growing number of investors who are seeking both financial returns and social impact.
Yeah.
It's a trend that's reshaping the investment landscape. And AU Small Finance Bank is at the forefront of this movement.
We've covered a lot of ground in this deep dive,
We have.
and it's been an eye-opening journey.
It has.
We've seen their impressive financials, their bold expansion plans, their unwavering commitment to financial inclusion, their cutting-edge digital strategy, and their prudent approach to risk management. It's clear that AU Small Finance Bank is a company that's not only performing well, but also shaping the future of banking in India.
They're a force to be reckoned with.
Yeah.
And their story is far from over.
Well.
They're constantly innovating, expanding their reach, and pushing the boundaries of what's possible in the financial sector.
Right.
It will be fascinating to watch how they continue to evolve and grow in the years to come.
And that brings us to a thought-provoking question for you, our listener. Given their impressive track record and their unwavering commitment to both profitability and social impact, what role do you envision AU Small Finance Bank playing in India's financial landscape 5 or 10 years down the road? What new horizons will they explore? What challenges will they overcome? And what impact will they have on the lives of millions of Indians?
Those are questions worth pondering, and I have a feeling their journey will continue to be filled with innovation growth and positive impact.
Yeah.
They're a shining example of what's possible when a company combines financial acumen with a deep sense of purpose.
It's been a pleasure dissecting their Q3 performance with you. I always learn so much from these deep dives.
The pleasure was all mine. It's
Yeah.
always exciting to unravel the complexities of the financial world
Yeah.
and see how they translate into real-world impact.
And to all our listeners out there, keep exploring, keep learning, and keep diving deep into the stories that shape our world. There's always something new to discover, and we'll be here to guide you every step of the way.